Yo, what up traders? Welcome back to a new video. I'm gonna be breaking down how I made over $11,000 during January. I passed 400k in prop firm challenges, and I will show you the exact blueprint, step by step, how I approach the charts, how I find those setups, and how I get this high win rate while passing challenges. So if you're new to the channel, make sure to subscribe. I'm gonna be live streaming tomorrow as well, so hopefully I'll see you guys there. But let's get into this video. Alright, let's break down the exact blueprint I use. I'm going to be showing you how to approach the markets from top down all the way up to the entry and how I get this high win rate passing these challenges during January. So first of all, we're going to go to the daily time frame and I'm going to remove all the markings here. I'm going to write down a list over here. So first thing we want to do is establish a higher time frame bias. Now, this sounds easy and everybody says you have to have a higher time frame bias, but how do you actually get a higher time frame bias, right? You start all the way up from the monthly. And you see me do this in the simulation session as well, right? I always determine where's the monthly candle most likely to go and where are we in the current monthly candle, right? So I'm going to be breaking down trades from the last week of January. This means that we're at the end of the monthly candle. That's important to know. If we go to the weekly time frame, the previous weekly candle was a massive drop, right? Indicating we're running towards sell side liquidity. And what happens afterwards, we cannot be sure yet until we get some signatures. And I will explain those signatures in a bit. So now we saw the weekly time frame going all the way below that low. So let's mark out that low, right? Now price can do two things here. When you have market cycles, we have an expansion. It can either consolidate, retrace. We don't know what market cycle will occur. So that's why we have to be patient. And we use, which is number 2, we use candle closures. Now, why are candle closures so important? Because we can actually see where price wants to draw next by the closure itself. So as a rule of thumb, you want to have a candle closure above a previous daily low if you're bearish, right? Like we see over here. Close below here, next daily candle bearish, close below, next daily candle. I mean, it's a doji, but it's still going bearish. And it will just continue bearish. And that is a signature of bearish order flow. Now, if you cannot be sure on the daily what it's going to do, we always go to the 4-hour. And the 4-hour time frame is the lowest time frame you need to go for higher time frame reversals. What do we need to have on a higher time frame reversal is very key. It is SMT, right? So that's number 3. You need SMT on a higher time frame reversal or retracement on the minimum. You can trade without SMT on the lower time frame, in my opinion. But if you're anticipating a reversal below a low, you need to have SMT. Now we're going back to those candle closures, right? Where are we looking for candle closures? If you look at the market maker buy model or market maker sell model, you always have a draw on liquidity, price runs lower, and then we have a reversal, right? You wait for a low risk buy to form, which is returning back into discount of the reversal, and then another leg, and now we can start looking for higher prices. This area, that's the most interesting area to trade, right? And if you look over here, right, we have this run lower, indicating this low risk buy, and then we have closures above down close candles. This is an indication that price seeks buy side liquidity. So now we have determined our bias, right? That doesn't mean you can get in straight up. So let's go to the 1-hour time frame. Let me divide up all the days here. So over here we can see I mapped out all the New York midnight opening prices, right? Which we use with daily profiles. And we're most interested in waiting for that reversal, right? So we have SMT on this low intraday, right? That does not mean straight up we're going to go into a buy model, right? But let's first identify a clear draw on liquidity, which is this one over here, right? This is the buy side liquidity we're aiming for, right? After we established that higher time frame bias, we need to wait for sponsorship. Also one key element, right? So that's step number 4. What is sponsorship? This is exactly how you use it. You use 4-hour candle closures and the sponsorship on the 1-hour time frame. That is your signature, right? Sponsorship means a fair value gap on the minimum, which is this one, right? So we have this fair value gap form later in the day. We have a run on sell side, right? We have a purge here and a displacement. So now we can use actual premium and discount, which is this. And why do we want to have premium and discount? Because we want to buy in discount, obviously. It is a very basic concept, but a lot of people just skip over this. Now, what kind of key levels do we have? We have this OB over here, right? So let's mark this one out. And the wick of this candle counts as well, right? So that's attached to the body, and that is an OBE. And you can see price, if I zoom in a little bit, the price hits that wick and then is very sensitive. Now let me show you a screenshot of my call out on Discord, right? Because I call this out in my Discord before it happens, so we don't do hindsight. So I can literally explain what price will do before it happens. And let's go back to the chart here. Why are we aiming for this? Draw liquidity, relative equal highs. Daily bias has been established. We have our sponsorship. We had our 4-hour candle closure. We have our level in discount, and the expansion phase comes after. Now, how do we actually catch a trade? Now we know that DXY is going to go higher. Let's go to GBP USD, right? I still have the markings from Friday, right? So we'll leave this here so I can explain exactly why I was looking for lower prices on Friday, right? If you look at what happened in the previous days, this is important as well. You will always want to look back what happened previously and what is the cycles we're working with. Now, we had a big expansion on Tuesday, and I actually wanted to look for the buy side here early in the week on Monday on Tuesday, but we never went back to discount. I'll show you a screenshot right now of Euro USD where I wanted to see price go back to discount, and then price didn't do that but still ran higher, right? So that sets the stage. If we go back to TradingView, that sets the stage, a run for high of the week, right? So we're working with the narrative and context here. So early on in the week it runs the high, creating the weekly candles high, right, on majors. So with that information we can see the price is kind of going sideways for the last 2 days here on Wednesday and Thursday. This is actually another element you can use if you want to determine if Friday is going to be an expansion, because we always look at the previous daily, what they did intraday. Now we have a bunch of SMT intraday, right? This also indicates the market is exhausted for the upside, and we're continuously breaking down lower with displacement, right? We are taking old lows and then forming bearish fair value gap, but you don't see any bullish fair value gap except for this one, but this one is irrelevant because it was formed during Asia and we had a purge and then a drop. So with that information, right, with those bearish fair value gap, we know the sponsorship, again, we know the sponsorship is in our favor. If we go to the 4-hour, for example, we can actually see that low risk sell happen, right? Just like I explained earlier on DXY, when you form that low risk buy and the candle closure confirms that you want to go lower, we start to look for sponsorship on the lower time frame. Now we go back to the 1 hour. We had the sponsorship right here. I had an initial entry during London, literally on the wick here, right, to look for lower, but then price wicked the lows. And I'll show you a screenshot from Discord as well, because it's very interesting to see how I anticipate everything beforehand, right? So we don't bullshit around and just literally focus on what's happening with current price. If we go back to TradingView here, right, we see that one more run up. And then I outline this IFG, and the 1 hour IFG is the best PD array to look for continuation trades after continuation purges. So what you want to do when you use IFGs on the 1 hour, first of all, you want to have that 4-hour candle closure, right? 4-hour direction. We want to have a 1 hour sponsorship, which is fair value gap. Number 3, we want to see a continuation purge, right? And a continuation purge is literally this. Price wicks above a old high into a level, and then the body is closed below and then displays lower, right? With the continuation purge, you wait for a failure fair value gap. Let's call it failure fair value gap, which is in essence the IFG, right? Because it fails to push price higher, and then we can use it as a support and resistance level. So that failure fair value gap becomes an IFG, and this is the literal area where you want to get in. So what we did during Friday's live stream, called it out during the live stream as well. We just literally shorted this fair value gap and we aimed for this low. I think I got it out over here, somewhere around here, because it was a 2R, right? I like to aim for 2R. But the draw is into this low, and that will probably occur on Monday. Now let's show a little clip from Friday's live stream, how I actually calm down everybody who's a little bit anxious, right? Sometimes price moves into your key level and you get anxious, but you have to be aware what kind of time frame it is, right? Because a 1 hour time frame is going to take a couple of hours to deliver towards your target. And if you're scalping, for example, it will be way quicker.
Is IFG enough for you to enter, or will you wait for 1H CSD? No, 1H IFG is enough here. Don't need to wait for all the way down here. Because we already did the purge. We're in an expansion phase, so it's just gonna go with the most recent PD array that formed. Right, and it's also a balanced range. We have an old bearish fair value gap, which is now a balanced price range. So this should be a very sensitive area where price just taps into and then drops.
Now let me show you one example where I took a loss, which also occurs whereas nobody has a 100% win rate, right? We're gonna go with EuroCAD, right? So we have a daily time frame here on EuroCAD. And if we look at this price over here, we've got all these highs, right? We run the highs. If we go to GBPCAD, which is a correlated asset, right? So on GBPCAD, we have this key level. So both of these line up for a run lower because we're in extreme premium and we want to look for lower prices here. Now, why did I take a loss on EuroCAD? Let's look at it, right? So I was looking for lower during this candle here. If you can spot the mistake, then you're already ahead of the curve. But what do we want to do? We want to have 4-hour candle closure to confirm, right? We never had a candle closure below the previous 4-hour low. We don't have it here. We don't have it here, right? So that never happened with the body closing below. So there's no indication that it wants to go lower. And then we saw this massive run up, which actually happened in like a couple of minutes as well at the end of the daily candle. And then we can see price run all the way lower. I will show you a screenshot in a bit as well of the call out where I aimed for these lows and on the lower time frame. The first low down here. Right, so let me pull up the screenshot. And now back to trading view, right? You can literally see I entered here on the CSDOB, which I thought was valid, but then it ran up and then it dropped. If we go back to the 4-hour, we can literally see the 4-hour starting to close below every candle here, right? Which in turn shows you their sponsorship to the downside is in an expansion phase market cycle. And this is where you find your opportunity. We can also see now this candle gets closed below. So definitely there were a lot of opportunities after the closure here to go all the way below these lows and eventually even this low. I hope you learned something from all these breakdowns I just showed you. Even with a loss, there's no 100% win rate. Make sure to tune in Monday, February 2nd. I will be live streaming. Hopefully I'll see you guys there. Make sure to subscribe and like as always, and I will catch you guys tomorrow.